So one of the things that I've been thinking about as this bull market hopefully takes, shape here, because this is not a bull market, has been the idea of taking profits. Like, a lot of people have been talking about, what their plan is to take profits. They're going to sell at the power law. They're going to, or the power opinion. They're going to, take some profits off the table. They're going to do this, that, and the other, right? And what's crazy to me is that none of these conversations involve tax. None of these conversations involve what if the market's changed. None of these conversations involve, okay, I'm going to make a bunch of money, but what if I'm wrong to sell it because the market structure changes and, things take off in a different direction compared to every other time. They're also making these decisions based on 3 or 4 data points, which is completely and utterly stupid. And so I've been thinking about it. I've been writing notes. I've been thinking about, every now and then I'm just out here smoking a cigar or whatever, and I start thinking about, okay, so how, what is the best way to take profits, at least in an intelligent way? And that's really the point here, is how do you do this in an intelligent way, right? It's not about just taking profits, because you can really you could time the exact top and still screw yourself. Right, and I'm in a unique position because living in Dubai, of course, I've got 0 capital gains tax, but even then, you could completely screw yourself. So what are the and by the way, now is the time to think about this, right? When everyone else is panicking that the market's going to end, now is the time to think about when are you going to take profits, because when the market is running, all they're going to be thinking about is the fact that it's never going to end. And so you need to start thinking defensively. If you're in that community, you need to stop thinking in a amateur way and start thinking defensively. Start thinking smart. Start thinking like smart money. Because smart money is not sitting here in this market going, oh, we're just gonna FOMO in. That's not what smart money is doing. And you can see that because of how the market structures change. And I've spoken about this before. You've got, they can't seem to move the price by 3%, right? In the last cycle, that would have just been insanely easy to do. So they can't move the price by 3%. And really, we're dealing with a scenario here where, we don't know what's going to happen, right? The US is moving so far, deep into Bitcoin and crypto that you don't really know what's going to happen here. So do you want to be on the wrong side of that? And I don't. And the reason why I don't want to be on the wrong side of that is because my Bitcoin is held forever, right? Obviously, I have positions, more than 100% of my portfolio is Bitcoin related, leverage and whatever else. But the core position is still Bitcoin. And there's no way I'm going to sell that, because I'd have to fly to 2 countries in order to get that out, in order to move it to an exchange and then to sell it, right? So that's all taken care of. The core of the position won't move. But the other part that's, pretty significant, there is the ability to take profit. So how do you think about that? That's what I want to talk about in this video, and why I want you to subscribe, because these are the conversations that I believe need to happen for smart people, and not just the, did you hear, the newsreaders, right? Like, did you hear what's happening in Bitcoin today? It's like, yeah, it's getting bullish. Like, okay, what else is new? So these are the conversations that I think are extremely important if you're a smart investor. If you're not a smart investor and you're $1,000 net worther with, 5, 10 grand in Bitcoin, whatever, none of what I'm saying is relevant to you anyway. Like, that's why I was begging people to get to 1 Bitcoin as quick as humanly possible, because of this moment. Now, you're screwed, right? So, look, here's the scenarios of profit from my thinking. The scenarios of profit are, firstly, you get to a scenario where a top is in, and you and I are geniuses, so we time the exact top. And we time the exact top, and then the market comes down 80, 90%, whatever, right? And then we time the exact bottom, and we get in. and we're paying zero taxes in this scenario. So zero taxes allows you to basically profit that 80%, right? Or whatever the dip is. There's two scenarios in that need to happen in order for that to be true, right? And it's like I got to time the exact top and I have to time the exact bottom to profit that 80%. Most people don't do that. So you're probably not going to say you're going to be 5 or 10% off the top and you're going to be 5 or 10% off the bottom. So now it's a 60% profit, right? You've got a 60% advantage, right? That's the best case scenario. The second case scenario is you sell at the top, you time the top, you sell at the top, it dips 40%, right? Now that still is a dip, but compared to 80%, that's not a bear market. That turns out to just basically be a QQQ, bear market, right? A NASDAQ bear market. And so that turns into another different thought process. Like, what's the point? And let's say you don't time the exact top and it only goes down to, let's say you get 10% off the top. Right? So for example, right now, let's say today was the top and we're sitting at, let's for example, say 120, right? Or let's just say 100, right? Just to keep everything simple. It wouldn't be unfeasible to say, okay, I timed the top, but I sold it at 90, right? So it's like, okay, well, now what if you have to pay taxes on that? And then it only goes down 40%, so it only goes down to 60. You've paid taxes on the 90, say you bought it 10,000, right? You got 80,000 of capital gain that you've got to pay taxes on, and then you got to buy it back at 60, assuming you time the bottom. What's the point of selling it? So then there's that scenario that opens up, right? And then you look at the situation and you go, okay, well, what if I'm just completely and utterly wrong and it doesn't turn down? Power opinion, all this other shit that's out there, all these models that are out there, go to absolute shit. And, it looks like a top, it smells like a top, it is a top, and then a strategic Bitcoin reserve, 1 million Bitcoin, restructuring of the US dollar. By the way, that's going to be my next video on restructuring the US dollar. So subscribe to the channel and follow me for that, because I think that's going to be a pretty important thing to think about if you are holding US dollars and an investor, just generally, and in a Bitcoiner. So, like what happens if you're just completely wrong, right? So yeah, there's a lot of scenarios here, because you could basically time the exact top. It is the top, looks like the top, smells like the top, is the top. And then it dips 10% and suddenly strategic Bitcoin reserve, Russian Bitcoin reserve, Chinese Bitcoin reserve, British Bitcoin reserve, EU Bitcoin reserve, NATO Bitcoin reserve, and now the price is basically 3x'd and you're out of the game, and your progeny is basically looking at you going, who is this dickhead, right? So you got that scenario. So the question really has to be, the way that I think about taking profits, because I don't like selling anything. I don't want to sell anything. Right? I'm not a hoarder, but when it comes to assets, I like holding on to those motherfucking things. It's as simple as that, because we live in a fiat system. So all we're trying to do is trying to gain some kind of profit, right? And in that scenario, every single time you just hold it and you're going to make more money than you were going to if you sold it. But there may be a scenario where if we have a significant run up, then you do want to hedge some profits, right? You do want to live a little bit or whatever, right? So from that perspective, it's like, okay, so the way that I think about it is, what is the profit that I'm trying to hedge, right? And I fundamentally do not believe that the market is going to crash 80, 90%. I just don't. I don't think that's going to happen. I think there's probably, a likelihood of a 40 to 50% dip, though. And what that would mean is that MSTR certainly would dip more than that. So really, that's the position I'm thinking about for myself. I'm doing this thinking in front of you to demonstrate how I'm thinking about for myself and how you should blueprint this. So let's say that we're looking at a 40 to 50, maybe 60% dip, assuming, and how we'll know whether we get this or not is if we have a massive run up. If the markets are very reflective, so if you don't have a massive run up, you're not going to get a massive bear market. You've got to have a massive run up. And that's why right now, what are we seeing? It goes up like 10% and then it dips 3 or 4%. This is what's going on. Previously, it would go up 60%, dip 30%. The markets are pretty reflective. Price action is pretty reflective. So I'm looking at hedging like a 60% dip. Well, in that scenario, I don't need to sell anything, right? Because I could take 5 or 10% of the profits and buy put options, which you couldn't do with normal equity markets last cycle, on MSTR, and with the leverage price action to the downside, probably get, let's say I could generate a 500% return on some put options with that, right? So it's like, is that a better way to do it? Right? Is that the right way to do it? Certainly with my MSTY position, if I do not see that we are in for an extended bull run in MSTR, even if it, is like a stair step up, then I want to pivot that to WNTR, which is the reverse of MSTY, right? And it's working really well. They're doing a really great job. YieldMax is doing a fantastic job. So I want to take the 5 or 7% that of my portfolio that's in MSTY and pivot it to that, right? Because I don't want to be holding a directional product, if we're going to go down, right? So that I start thinking about that. And really, you have to think about this, because if you have a tax liability, you're even more screwed, right? From a pivoting point of view, because you got to pay the tax. So put it like this. Let's say you got a 40% tax liability and we see a 60% dip. Well, let's just assume it's the whole 40% that gets paid in taxes. It won't be, it'd be like 32%, something like that. But let's just say it's the whole 40% of the profit. Well, now you need to literally like bottom tick the 60. You need to bottom tick the 60 in order to get a 20% advantage. And are you smart enough to bottom tick the entire bear market? I would argue that you're not. I'm sorry. I'm your friend, but I'm also Uncle Bullish. You're not smart enough to do that. You are not. There's going to be the one moron that gets that right and everyone celebrates them and whatever else. But you watching this video are not smart enough to bottom tick the absolute bear market candle. I hate to break it to you. I know everybody told you you're smart as shit, but you're not. And I don't want everyone to screw up their portfolios thinking they are. So, but if you've got tax liability, you've now got you've got to bottom tick a 60% candle to get a 20% advantage. And then what if it's 50? So then how are your emotions going to process that, right? So you've got to look at the tax liability. You've got to look at all of this shit. To go, okay, so how are we going to hedge this? How are we going to take some profits on this? If we're going to take some profits, or we just ride it, right? So these are the types of things that I want you to start thinking about when people start saying, I'm going to sell some at this, or I'm going to sell some at that, right? Especially people living in America. Like you got and you got some if you're living in California, what the hell's going on here? Unless you got other write-offs and other things that are allowing you to take profits, and even if you bottom tick a 40% candle, which you're not smart enough to do, but let's say you did, then you would be ahead, so to say, right? And of course, if you're just the type of person that just has enough Bitcoin in there, you're in retirement, you want to enjoy yourself, and you time a quote-unquote top, take some money off the table, enjoy your life, they're going to get you one way or the other anyway, right? So you might as well be the one to actually enjoy this. They're gonna take your Bitcoin. It's just very simple. I've come to that conclusion now. I'm seeing on Twitter that there's people losing their fucking minds over a 2.5% correction. So they're gonna take your Bitcoin. There's only a few of us that are gonna land here and sit here with that Bitcoin. And I'm doing everything I can, being in my position, being as bullish as I am, I'm doing everything I can to jam up my Bitcoin so that it can't be moved. Not just by me, by future advisors, lineage, progeny, whatever. Just cannot be moved. Rules, legal. cannot be touched. I'm not relying on anyone's decision making. It cannot be touched because it is absolute finality of scarcity, and I want that held under any circumstances. Right? So that's really, the thought process of when to take profits. And these are things that you have to think about. You can't just get carried away. How many people have lost a lot of money over this summer getting carried away watching what appears to now be, from what Michael Saylor said, bots on Twitter telling you that one treasury company is too expensive, and they're getting into another treasury company, and they're human slaves, they're nerds that are sitting there going, oh yeah, I'm selling my MSTR and getting into this 7XM NAV company, and then that 7XM NAV company compresses down to 2X, so I'm getting back into MSTR. Stop being retarded. That is leaking wealth, right? I would actually prefer you go out and buy a Lamborghini if you're going to do that, because at least you'll have some fun. It's better to leak wealth via a Lamborghini or a Porsche or a Ferrari or a watch or whatever than that. 100%. I'm 100% in favor of someone who wants to leak their wealth. Do it in a way that might actually give you some enjoyment, because trying to trade between 7XM NAV treasury companies is not going to give you any enjoyment. So, think about it when you take profits, because profit, people always have this saying, like, nobody ever went broke taking profits. Bullshit. I do not believe that. It's kind of getting to the point where it's like any saying that like the general public believes is just, you just have to completely assume that it's complete bullshit, right? Nobody ever went broke taking profits. You absolutely did if you got into Bitcoin and then sold out for US dollars. Because you had finite capital, finite real money, and you sold it out for US dollars, and now you're getting devalued at 7 to 11% a year. So yes, people went broke taking profits. I know many people that sold out of real estate, sold out of assets, whatever else they did, and suddenly went into the pound, went into the dollar, went into whatever, and now they're broke 15 years later because they sold out that asset. Nobody went broke taking profits is a moronic statement, and it tells you exactly where somebody's mindset is, because people go broke taking profits all the time because they don't understand what they're investing in. That capital and that energy has to be held in something, right? So you got to put it into something. There's a lot of times people, mock me for loving watches. Not only do I love watches, not only do I collect watches, but I also take, whenever I find some liquidity that I maybe had to take out of certain other assets, it goes into other things. Like, I'm not a big car guy. I don't put my liquidity into cars. Cars go down in price, right? So it's like I'm not out here building a car collection because it just doesn't do anything for me. This at least hedges, the depreciation in the value of the dollar, right? It's not going to do what Bitcoin does, but at least it hedges the depreciation in the value of the dollar. So nobody went broke taking profits is a completely and utterly stupid statement, because it depends on what you do afterwards, because you're getting out of that pristine capital and going into Bitcoin, and you need to hold the Bitcoin. So thinking about when to take profits, especially if you've got a tax liability, especially if the markets change, especially if there's only a 30-40% dip, is extremely important, because ultimately there's always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.